Welcome to the CEIBS China Knowledge Podcast, produced by the China-Europe International Business School.
Good afternoon, everybody. It really is a great pleasure to be here. I think we've heard, everybody thinks they live at a time of change, but this combination of massive amounts of data and the computer power to do something with it, and then applying that to people's lives, I think is truly transformative of what's happening with people and business. And that's something we'll try and discuss in the next hour. I got the message, Philip, next hour. So we'll do that. Now, I'm Andrew Ratcliffe. As he said, I'm past president of ICAEW. I'm joined by Alistair Johnson, immediately on my left, who works founder and CEO of Nugget, which is a consumer blockchain company. And then next to him is Mark Headley from the China Business Council, working on IT. Then Kevin Yuan, who's a venture capitalist working again in blockchain. And on the extreme left, Wang Tong, who works for SwiftPass. So let me welcome each of them. What we'll do, we'll each make some opening remarks and then discuss really a series of questions. What are the opportunities for big data in financial services? What's the very important relationship, which has been touched on by some of the speakers already, between innovators and existing players in financial services? The big issue of security and privacy, and if we get time to get onto it within the hour, I think also start to talk about what has been very much the theme of this afternoon, the opportunities for cooperation between UK and China businesses in this field. So let me start off. ICAEW, Institute of Chartered Accountants in England and Wales. That makes it sound very small and parochial. I'm afraid that's a Victorian name. I like to say ICAEW stands for the Institute of Chartered Accountants everywhere, because we have 150,000 members. Almost a third of them work outside the UK. About a quarter of our students currently studying are outside the UK, and actually increasing numbers of those in mainland China. We're deeply interested in big data and its effect on business and on finance, because that knocks on into our profession of accountancy. And we've done a number of studies in the UK of that. And most recently, and guess why I'm here, we did a study jointly with the Shanghai Institute and INSPA of the effect on Chinese companies. And this is a report here, which is available, I think, today, and it's dual language, so we've done it in English and Mandarin, of our findings. Let me touch very quickly on what that report says, because I think that may frame the discussion. First of all, what's different? I mean, and this has been said already, China is clearly a massive source of data, and the internet connectivity and the mobile connectivity gives huge data sets, and naturally more data gives you more insights. So it is a much more powerful within China than even within the UK and where we've got to here. And the second thing I think is the Chinese government has been clearly very purposeful, probably the most purposeful government in the world, about how they want big data to transform China's economy and develop it. And it's a key part of the 13th five-year plan across a number of industries. But, you know, the things that one finds in common are the organizational and practical issues that arise through using big data. First of all, aligning it to the business need. I mean, you know, a huge amount of data is a great thing, but it can overwhelm. You need to know and you need to resolve what are the real things you're interested in, what are the key questions you need to ask. The need for data governance and standards. We talked about security and privacy from a regulatory point of view. I think actually one of the more important thing is people's appetite for their data to be used. I mean, I call it the dilemma between data cool and data creepy. You know, what do I think is acceptable for a company to do with my data? And there is no established standard. You know, different people of different age groups will think differently about that. Different people in different countries will think differently about that. And I think that's a real challenge for business to layer and gauge their services in order to find acceptance amongst their consumer base. Fourth point, the use of big data means the decision point in companies move. It does challenge existing structures and processes within an organization, because this is less, a sort of old command and control. We do lots of analysis and all floats up the top, and some very wise men, and it would be men, wouldn't it, make up their mind. Now decisions are taken much closer to the customer, and there must be empowerment to do that. And then the final thing, the thing that interests us at ICAEW most of all, is the implications this has for people and skills. And I think that is something we need to think about. I mean, we, at the moment still, the boundaries are getting blurred, but still one thinks about people as a technologist or a statistician, or they know about finance, or they understand business. For this to work properly, those boundaries need to be blurred, and people need to be confident about working across all four of those. And my prediction for 50 years' time, maybe less, I won't be here, it doesn't matter, is the CEOs of the future will be people who to combine all of those skills and all of those backgrounds in bringing their decision making. So let me turn, Alistair, to you. Would you like to kick off some comments?
Hello. Hi, I'm Alistair, founder and CEO of Nuggets. Our predominant belief at this stage is that personal information should be held by the person and controlled and owned by them. In these days of big data, there's immense amount of information that's going around that can help businesses, and that is a good thing. But do we necessarily need our intimate personal information stored inside that to benefit how many people should be opening a new current account, or how many people are using a mobile service? We believe that currently, in the scenario where this data is flying around all over the globe, we're seeing on a daily basis breaches and issues that are creating problems beyond this big data that we're creating. And from our intent and purposes, we're seeing the potential of things like blockchain, which can help with security and privacy, both in business data and in personal data, and how they can work together in the future, globally and regionally. And I think there's a massive potential in this new technology that is coming about in terms of the potential for zero knowledge storage, and beyond that, zero knowledge proofs, where you can cryptographically prove something without actually revealing it. So these new technologies are giving us a level of potential that we haven't seen before, and literally blockchain alongside big data is like a new revolution. Probably we haven't seen one like this since the internet 20 years ago. But what I really do believe that this time it won't be 20 years to come to fruition, it will be 10 years and probably even less. And China specifically will be at the head of that, because they are leading in terms of e-commerce, mobile payments, and the whole sector across that. And it's very exciting that we're all here today to look at the opportunities for cross-border association with China and UK and other global regions. So there's massive potential in the new technology in this environment. But as we get that potential, we have to look after the information that we gain from it and be careful of how we use it so as not to spoil it in the future.
Okay, thank you. Good afternoon, everyone. And thank you, first of all, to CEIBS for inviting the China Britain Business Council to take part in today's discussion. I have to admit, to begin with, that I'm something of an imposter, being sat next to three very tech-savvy entrepreneurs. My role at the China Britain Business Council is very much, we as an organisation are a bridge between the UK and China. So we exist to help companies in all sectors, not just finance and technology, to understand and access opportunities in China. And likewise, we support Chinese companies coming to the UK with their European business strategies. So I think we probably have more of a bird's eye view of working in China and what that means for tech companies in terms of the specific challenges that there are. I mean, I think in terms of, to begin with, where we see the, I mean, it's just incredible to begin with the explosion that we've seen in FinTech in China over the past sort of 5 or 6 years. I mean, I think, 5 or 10 years ago, we were talking about a very antiquated financial system in China. We heard that from speakers earlier. And so innovation, I think, in China and innovation in the UK has very different drivers behind it. In China, I think it's very much been about the fact that so much of the market was underserved previously by the financial sector, that you had a very low proportion of the population that had access to credit, that even SMEs struggle to gain access to credit. And really, I think that the tech players, the e-commerce giants, the big digital players in China have sort of stepped into that vacuum and really leveraged their data. And it is really a story about big data. I think that China, unlike almost any other country, has such vast pools of data that sit with a very finite number of technology giants. And it's really been that connection between the technology companies opening up their data sets and leveraging the kind of growth in e-commerce, the growth in digital and mobile adoption. We're now up to about 800 million internet users in China, and it's leveraging that and that connection between the underserved market with the innovation happening in the private sector. So it's been an incredibly exciting time, but of course that brings with it huge challenges and risks, and I'm sure that we'll touch on the issues around privacy and security and the kind of the questions that raises, particularly for the regulators in China, in terms of how it can continue to fuel innovation and continue to support the rollout, the adoption of financial technology, balanced against the need to maintain that kind of economic and social stability, which obviously in China is always a key concern as well.
Kevin, over to you. Would you like to say some opening remarks?
So I'm Kevin from China. I'm the founder of a leading peer-to-peer lending platform in China, Dianrong. And 2 years ago, I have my own FinTech fund and focus in investment. So in these questions, I would share some privacy and right to achieve financial service, which is more important. We ask this question every day in China because founder of Baidu, sometimes the public announced that Chinese people cares only little about privacy. They can share every personal information on the internet to get some bonus. So it's partly true, but it's not exactly true. But sometimes we can see 70% of Chinese people are hard to get financial service from traditional institutions. So sometimes they don't care about the interest rate. So payday loan, really popular in the past 2 years and banned by the government. We can see what happened. They go to the underground, and from the 300% annual interest rate to 2,000. And the government say, oh, we don't have the payday loan now. We banned everything. But the customers, they have the more higher interest rate right now. So in China, we collect almost everything. BAT, Baidu, Alibaba, and Tencent collect everything, personal information. And one good example is Ant Finance. Right now, it's $150 billion valuation. Where this valuation comes from? All the data about the consumer. They collect the people who consume on the Alibaba, Taobao, and your GPS information, your track record, and your personal credit information, and then build up Ant Finance without any cost, extra escort. So this is unfair, I think. So in China, privacy built up a lot of good giant in fintech companies, and a lot of customers benefit from it, but they sacrificed privacy. So sometimes you should balance. So in my mind, I think if for some people hard to get a service, so sacrifice privacy is the only one way. And another example is when Alibaba cooperate with traditional financial institution, they reject it and they say, we don't work with you. And so Alibaba do all the data collections and do their own finance service and get the license. And they have their road. They benefit from the policy. It's really inclusive in China for the past 10 years. But right now things changed. And the Chinese government really cares about people's privacy right now. And for the next few years, I think things will be changed. So based on these questions, I think in China, privacy it's not that important but sensitive. But for the customer side, they have no choice. If they want to have the service, no way, they just sacrifice everything. Yeah.
Tom, would you like to make a couple of opening remarks on your background?
好，非常感谢这个中欧。
Thank you very much, especially CEIBS for giving me this opportunity to share with you my thoughts. I'm the co-founder of SweetPass Technologies. Today we're here to discuss security and the privacy issues. Actually, Professor Jiang shared with us one thing, and I highly agreed with what he said. So he said most of the average businesses or consumers, they were not served by the banking sector before. So Professor Jiang also mentioned that banks only serve the needs of the 20% rather than the 80%.
In recent years, a lot of the fintech companies in China took off because they fulfilled the needs of those 80% customers who were neglected in the past. So now a lot of fintech companies could provide services to them. So in our company's history, in 2013, we were established, and now we have been around for 4 years. So in China, we deal with about 30 million transactions on mobile pay, and over 80% come from those really small business owners. So they couldn't enjoy POS, point of sales technology in the past, but now because there are mobile payments, all the other new payments, so these small businesses, they really embrace this. So, of course, the theme of our discussion today is that in the new era, privacy and data protection should also be focused, because unless you take care of them, these things might be sacrificed. So we might sacrifice certain privacy and data protection issues in order to get some reward. So for some Chinese people, they might want to sacrifice their privacy for some convenience. But to them, what they are sacrificing, in most of the situations, they do not know about these things. They are not fully aware of what they are sacrificing. So a lot of the fintech companies in China, they are not informatizing the users of what they are sacrificing in terms of privacy. So I think we need more improvement in this area. But of course, I agree with some of the previous speakers that at this stage of our development, the citizens, they are having more and more awareness, higher awareness about the data privacy and everything. And the countries, they are issuing laws and more regulations. So I think in the future, the legal framework will kind of work towards this. So in the future, data protection, privacy protection in China would have a good future.
of data privacy and security for a bit, because we've sort of drifted into that as we've made our initial remarks. I think it's very interesting, as you know, I think as each of us have said, actually, there's no single standard here. I mean, attitudes in China are different to ones in the UK and Europe, and I would say, you know, my attitude to data privacy is different to the one my daughters have. I mean, some of them might be, you know, Chinese in their outlook of, well, it's all out there, I get free stuff, that's, you know, what's wrong with that? But I think there is and you referred to it, Tong, there's something here that, yeah, a lot of people are doing that unknowingly, and does that change, you know, and we've seen it with Facebook and Cambridge Analytica, which I think is a real milestone of people waking up to actually what some of these companies are doing with their data, and then either restricting or withdrawing provision. But of course, you know, it's a sort of strange pact, because, you know, the less data you give somebody, the less they can do for you. I mean, it's a pure function of that. I mean, Alistair, you sort of touched on that. Is there a way of resolving this through technology, of allowing people to use your data, but you know, safeguarding your sense of privacy and individuality in any way?
I believe there is, and as I've said before, with blockchain, that's helping in that area. I think at the end of the day, you're right. Data is very important to businesses, and although we believe personal information should be controlled by the person, and they have the choices at that point, so they can pass on their information if they wish to get discounts and things like that. But also, a lot of behavioural data can be gathered from use of product, interaction of services, you know, that's very valuable to the industries. And I've previously worked with Microsoft, and I've seen how they do that, and they have to automatically anonymize it from day one, yet they have a wealth of data that's good for developing business. So I think it's the point is to inform the user at what point their data's been asked for, and do you really need my mother's maiden name to sell me a pair of socks? Probably not. So at that point, that information can be kept back. But then you can use the technology in terms of zero-knowledge proofs and things like that to demonstrate or have an attestation to say that you have got know your customer verification, KYC, or AML in the future. I mean, currently we've had a big problem. We've seen Equifax, and they're meant to be the custodians in the West of personal information. However, and you've got to leave their stuff with them for 7 years, yeah? Now, they've proven to us that they can't look after that, and it's gone all over the world. And that's very damaging for a lot of people. And no business wants that, because that's damaged Equifax to the tune of probably $800 million so far, and they reckon it's going to cost about $4 billion in the end. So no business wants that, bank or business. So everyone wants to protect that information to a good standard and respect people. So that's where technology can really come in and help there.
Kevin, I don't know whether you come from this background as well. What would your thoughts be on that?
So we have closed a meeting with the China regulator about how blockchain and the new technology can protect privacy of customer. I think we can find a way. And because based on the blockchain, you can set a different level of authorization to use the data. So you can separate the ownership of data and the usage of data. So sometimes if we can do like that way, and we can protect our customer very well. And also, I think the blockchain, with the development of the blockchain and centralized giant like an internet company will disappear. And because they are the centralized credit center, and stranger, if we want to do transaction, you should use the centralized platform. But based on blockchain, you can transfer value between the strangers directly, don't need any centralized platform. So blockchain can build up this world like that. So I also think the blockchain can build up a black box. So you put every data inside and output some result without give the raw data. So that will make sense to our customer to, without any doubt, to give anything data, but it still need law. So I think in computer scientist world, code is law. So that means if you design everything with the program, and you will follow the law of the computer. So right now, I think, because I used to be a lawyer, I think in the near future, the law will be the code. Everything, just like a GDPR in Euro, is a good example. I think all the world should follow like that. Maybe in few years, China will realize that the GDPR, to give the right of ownership of the data, is really, really important to help this world. So I expect this day coming soon.
Okay. I mean, and I think I've read, this is something that Tim Berners-Lee is working on as well, of a way of allowing people access to your data and getting the answer to the question that they're asking, but without having access to the data itself. And so, that generating some confidence.
I would like to add one more. So the token system of blockchain also be helpful to this. So whenever you give the data, in traditional world, it's hard to get US dollar as a return. But in blockchain world, you can easily get the token when you share the data with the world. So that economic ecosystem can also help the technology to promote very well.
Okay, thank you. Look, let's cast the net a bit wider, and I'll go along the whole row this time to the sort of core question of what can big data do for a business, or what can a business do with big data? What's the real opportunities here in terms of particularly, financial services and financial inclusion? Tong, would you like to start us off on to what you see from your perspective as to what could be done?
好，我觉得
So I think big data for business, especially for financial businesses, and also for FinTech, it can bring really several benefits. First of all, it can discover new market opportunities for them. As I've said, in the traditional banking industry, 80% of the customers were neglected. So because the institutions couldn't deliver what they need due to technology constraints or labor cost constraints. But now, because of the technology development, these traditional financial institutions would be able to serve their 80% customers better thanks to technology development. And secondly, it can help the businesses, financial institutions to mitigate risk. Recently, we are helping some of our customers, including banks, to develop some softwares. We use big data and big data analysis to look for the transaction amount and the cost associated with them related with the financial institutions. So when the banks are looking at certain applications, they can check against the big data record and see whether this loan should be granted or not. So such risk management or risk mitigation practices can be achieved thanks to big data and the relevant kind of technologies. So I think big data can really have a lot of applications in this field, in risk management and risk mitigation. And thirdly, big data can help financial institutions to lower the cost of transactions. In the future, the banks will have fewer and fewer physical branches. In China, when I go to any banks, a lot of the counters are humanless. You don't really have a human being serving you anymore. So I think with big data, with relevant technologies, the cost of labor will be lowered and the bank's service efficiency and cost can be lowered. So these are the things big data can do for us, I think.
So I think the big data give the possibility of to serve the massive customers. For example, we know 70% or 80% of customers in China hard to get a service, financial service. And what we do, as a peer-to-peer lending platform, we give the 1 million budget for some new group of customers for test. We are ready to lose all the money to just get the data from the stranger group of customers. But in banking system, they don't have the systematic support from the central government to allow them to do. So we build up the possibility to collect, to set up the data for underwriting them. So the second one is we provided the possibility to raise the precision of the pricing. That all the kind of, in theory, all kinds of customers should have the financial service. If the high-risk people, you give the higher pricing, you can serve them. So just to come back to the example I raised before, payday loan. So in UK, it's also have a lot of payday loan customers. But based on big data, you can step-by-step lower the pricing for the high-risk group of people. But if you don't allow this practice, you just, what happened in China, the customer afforded the 2,000% interest rate. It's unfair. But if you can put it on the table and ask all the financial institutions, including bank and the non-bank institution, to do the service with them, and all the transparent track record can help the other institution to lower the pricing. The full competition will give the inclusive finance good opportunity, I think.
Mark, your thought? Okay, yeah. I mean, I think I'd probably just echo both Mr. Wu and Mr. Tong, in that I think that it's big data really is, as I said before, it's by filling that vacuum, it's bringing more people into the financial system by creating credit histories for people, by leveraging big data from multiple sources, which I think is in turn putting pressure on the financial institutions to revolutionize how they're using technology, whether it's through blockchain or artificial intelligence, creating more accurate risk profiles for consumers and businesses. And I think that does all those things. That lowers costs, it increases efficiency, it provides more, it eliminates risk from lending and from servicing those customers. So I think over the long term, it's a natural trend. It's something that's happening in the UK and in China. But obviously, China's financial system is playing catch up with Western economies in terms of its starting point. I think in terms of, obviously, we tend to see this from the perspective of British companies providing technologies and solutions to Chinese businesses or consumers. I think for the UK, obviously we have a session later on artificial intelligence, and that's certainly a core strength for the UK. I mean, we have some amazing expertise around applying artificial intelligence and machine learning to the financial industry. So that's where, I think at the moment, that's where we're seeing the greatest level of opportunity for British companies in China. Obviously, the consumer fintech market in China is very much dominated by local players, and some of the regulatory restrictions that still exist in China for foreign financial services and technology companies do act as a barrier to market for some of those consumer applications. But so really where we're seeing the opportunities is around working with Chinese financial institutions, Chinese companies to give them access to or improve the way in which they're able to analyze their consumer base and deal with issues such as risk and so on. So that's really where I think it's in that kind of business to business space rather than the consumer space where we see the greatest level of opportunity.
Alistair, what are the opportunities as you see them for big data for business?
Yeah, I think it's not having big data alone, it's how you use it and how you segment it that really gives value to businesses. So it's being able to spot specific target groups and helping them get benefits and products and services in that way. And I think that's really important. We've talked about how big data can be used for risk assessment, but at the same time, we're seeing it fail on a daily basis where you can go to try and use a card and it risk assess you, but because you're in London instead of China, it's not allowing your card to work. Now, again, blockchain has opportunities with trustless networks where you can actually come proven as a good actor on the network, and you won't in future need that risk assessment when you step off, because your digital identity will have a proof of thousands of transactions, and the excitement and potential about that is great. So I think it's big data. The real potential is how you use it, how you segment it, and then apply it. Big data in alone just sits there and does nothing.
Sure. I mean, reflecting on that, the themes which the four of you have talked about is enabling access to financial services for people who haven't previously had access. And that's probably more an issue in China than in the UK. In the UK, it's more about dematerializing. Banks are closing their branches, hundreds a week, because people just aren't going in there anymore. They're using their mobile and so forth. And then the second point, which I think is really interesting, is enabling financial services providers to segment their customers more clearly. And, as you said, Mark, very clearly, allowing people to build up credit histories to access credit later in their lives and form the basis of that. But let me sort of ask you each a supplementary to the danger in that, it seems to me, kind of the flip side of the coin is, does it allow financial service suppliers to analyze too far to the point they say, actually, we don't want to deal with you guys? That you get sections of the population that may have been served before, but now get positively discriminated against, because they're ex-prisoners or, they live in the wrong postcode. I'm using UK examples or whatever it is. And the algorithm just goes, boom, we kick you out because that doesn't match our risk management policy. How would you react to that? Who wants to pick that up first? You've got the microphone, Mark, so I think it's you.
Okay. Yeah, I mean, I again, these guys are probably working in the field, will have much more deeper insights than myself. But obviously, I think that it is ultimately it's an ethical issue that individual users also have to face. China's an interesting situation, because I think that in China, on the one hand, we see a movement from the government to sort of regulate data privacy a little bit more closely and actually restrict what the big technology what access the big technology companies have to those data sets and how they're able to use them. But on the other hand, we also have a government which is, putting in place or looking to put in place a social credit system where your access to services, whether social services or financial services, may be affected by your behaviours, or have you got a parking ticket? Have you, different data points that may feed into that. So I think there is something of a paradox between that move towards kind of controlling the way or limiting the way in which Chinese companies can use people's data, and a sort of a broader move towards actually harnessing the power of that data for other purposes. Should insurance companies be able to utilize your Facebook feeds to build a risk profile? And I think ultimately it comes down to the individual and educating individuals on the importance of understanding and owning your own data, and then that enables people to make informed decisions about what data they're willing to share with these companies, and perhaps in some cases people are willing to make a deal with the devil because they see the broader benefits to doing so. And for other consumers, it may be that's a step too far. I think ultimately, though, it may come down to governments and countries coming together to sort of determine what the best ethical codes of practice are. And I think that we're still going through that process in all countries, both in China, UK, and rest of the world.
Kevin, is this an issue in China, the potential for people to be, for digital exclusion almost?
You mean the abuse the data?
Yeah, for big data to be used. I mean, actually, you might say in perfectly rational business terms, but end up with poor social outcomes.
So I think it's easy to understand and it's common. So for the commercial entity, if they want to have a higher profit and income, they reject some high-risk people. I think it's acceptable. But sometimes big data misleading people. So who can say the people used to be in the prison will be higher risk than people not in prison? Sometimes, maybe not. So we should understand this. And another example is what happened in U.S. In U.S., I don't know the exact name, but the name of the act is Fair Lending Act. Something they prohibit that financial institution to use the personal information like gender, race, and age to reject the people who apply for the loans. So I think sometimes the market loses efficiency. The law should be work.
Okay, let's move on. I mean, because I want to cover the third question, then maybe have a little bit of time to take questions from the audience. I mean, the third issue, which would be, and again, I'll go down the line of all four of you on this, is the other really interesting one of what's the relationship in this world between the innovators and the established players, Is this open warfare and the innovators will win, or do they get taken over, or how do you see the future working out? Alistair, you go first.
I think at the end of the day, there's enormous infrastructures in place in all regions, whether it be China, America, and you have to work with regulation and the regions in how they work, whether it be social principles in terms of privacy, or whether it be regulation and rule and law. And even as a startup, you can't come running in and go, I've got a brilliant idea and everyone agrees, but we're going to move all that out of the way. It doesn't work like that. You have to work with the existing and then hope to develop beyond that and advance it further down the line. So I think what it is, in terms of what we're doing, we look at things like Alipay and WeChat Pay and say, well, they're so big, how can we add value to those things, yeah? Can we add value to the existing problem? We're having data breaches at banks and card payment in China. We're having AC Fun had a massive data breach recently. How can we help benefit those to, see what their pain points are and address our new innovation and new technology to that? And I think that's the way to do it. And over time, that becomes the norm, as like the internet became the norm. I believe the blockchain will become the norm. And in future, we won't have these conversations about blockchain because it'll be almost irrelevant because it'll be sewn into every element that exists that we interact with.
Interesting. You sort of mentioned Alipay and WeChat Pay as established players. Other people would say they're the innovators and they've exceptionally wiped Visa out in China, haven't they? But I mean, Mark, what's your view as you look at these? I mean, is this cooperation or is this competition?
I think it's a bit of both, to be perfectly honest. I think that maybe we're moving from competition towards more cooperation. I think that, obviously, clearly, in China, for example, the WeChats and the Alipays, certainly did certainly shock the banks, in terms of the sheer level of transactions that were, being diverted through these platforms rather than through the traditional banking system. But of course, China came from a cash society. It didn't come from a particularly well-established online banking ecosystem. So in a way, the Alipays actually just replaced cash. They weren't replacing kind of credit cards, which were still, for the vast majority of the population, was still usage was very low. So I think that it's a complementary technology, and actually what these big players have done is they've created this incredible growth in e-commerce business that has actually benefited the banks ultimately in terms of merchants, the increase in merchants, the increase in trade flow. So actually, I think the overall growth of digital and e-commerce in China has been of benefit to the banks. It's forced them themselves to invest in innovation, and I think that certainly the past couple of years, all of the major Chinese banks have woken up to the fact that they need to innovate in order to sort of survive, and of course. There are collaborations and partnerships that we're seeing between the big tech firms and the Chinese banks. And I think, certainly Multipass, I think, work very closely with, tech startups that are in China that are working very closely with banks. So it's, there is this sort of broader innovation that's being brought about by competition. So I think ultimately it's a collaborative opportunity.
Kevin, are you going to take over the world, or are you going to sell out to a big player?
My answer is simple, definitely competitors. So I can only tell in China, when Alipay's volume increased crazy, and the big banks like top 4, they have the lobbying group in central bank. So whenever innovation from Alipay try to apply for the approval, they try to block it. So this is what happened that we can see. And also, Alipay, whenever they started the innovation, the only obstacle for them is a lack of the license. So whenever they can get the license from the government, they will be very aggressive. They only believe winner takes all. So that's the reason why when they apply for the IPO in China, we'll have a lot of problems from the government. So I think, yes, some innovation can be applied to traditional financial institution, but because of the system, just like 90% of financial institutions is state-owned. They have the very lower efficiency, and they don't have the energy to use something uncertain because it's not owned by themselves. So whenever the innovator and they use the new technology, whenever they find out it's useful, they will expand their business as soon as possible. And so if the government give the space to them, they can take all.
Tong, do you see yourself as an innovator or an established player?
I think for my company, we're still a startup company. We are still an innovator. We are already a listed company, but if you look at the size of our business, I think we're still a startup company, an innovator. I think this is a very interesting question because when I first got into this industry, Jack Ma said something very famous. He said that if the bank refuses to change, we will change the bank. So what does that mean? He saw himself as a competitor to traditional players in the financial industry. So over the past few years, a lot of FinTech companies saw themselves as having very big and broad mission. So they find a lot of problems in traditional banking sector. They thought that they were about to change the whole world. In recent years, a lot of traditional banks are working together with FinTech companies. So this attitude has changed. Jack Ma later said that we are not a FinTech company. We are called TechFin. So he puts tech before fin. So that shows the change of his attitude. So that is to say, a lot of Chinese FinTech companies are also changing their view of technology and a view of the world. They want to focus more on technology instead of launching new financial products. Because launching new financial products will be more risky, and it also has everything to do with regulatory environment, because the financial sector is a pillar industry in China's economy. So for the core products like the counter system of customers cannot be in the hands of a private company. It will be very risky to do so. So for China, especially starting from last year, companies like us try to use our tech capabilities to help traditional players, including banks, to improve their efficiency or to change their work processes. Take my company as an example. We actually help banks to work with WeChat Pay and Alipay. They used to be competitors, and banks used to offer a POS machine to merchants, right? So you can only use credit card. But WeChat and Alipay, they use a QR code for payment. So for users, it's much easier to make payment through mobile phone. But what we offer is a combination of the two. So banks, they could offer two things to the customers. They could either swipe their card, or they can also use a QR code to make payment. So this is more like a service to the bank to help them to provide better service to the customers. So this combination actually creates a lot of value for banks, because they can keep their clients, and at the same time they can use the latest technology to improve their services. So I think in the future there should be both collaboration and a competition.
Thank you. You touch on a really interesting point there, which we haven't probably got time to go into, that one of the challenges for established players is to deal with all of these channels, through the FinTech, through mobile, through call centers, online, maybe even some people still coming into branches, and enable customers, to switch very readily between any one of them and to carry on a conversation across any of them. But look, we've got about 5 or 10 minutes left. Let me turn to the audience. What I'll do is I'll take 3 questions, if we've got them. I'll take all of those 3 together and then just get the panel's reaction to those before we wrap up. So I think we've had a really interesting discussion here. What thoughts has that stimulated in the audience? Have we got any hands up? Yeah, Deepak.
So I come from the marketing field, and I started doing research in the early 80s when the scanner data came out. You went to the grocery stores, you bought the products, and everything was scanned with your identification number, what price you paid, what brands you bought, whole information. And this information we collected, and what you said, we used it a lot to do market segmentation in terms of identifying customers who were more deal prone as opposed to who were more brand loyal and others. The only thing that was never revealed to us was the name of the person. All other demographic characteristics for market segmentation. And it never became a big data privacy issue till today. Most of the papers I have written till today deals with all these huge volumes of data. Why is this becoming such an issue today? I'm just slightly...
Let me just, let's take any other questions that we've got. And a hand up right at the back there.
Hello, Meg Utterback from King of Wood Mallisons. And my question is, we've talked a lot about blockchain, which is also to some extent smart contracting. I wanted to bring it back to the Belt and Road and ask the panel, when do you think we'll see actual smart contracting being implemented on the Belt and Road? And will that ultimately lead to a sovereign-backed cryptocurrency from China?
Okay, thank you. One more.
Sorry, my name is Charles Smee from Transaction Focus. So we, in terms of, if you're setting up a FinTech company, in Hong Kong, is there a political barrier to the rest of China with some tensions, or does that not exist so much?
Right, thank you. 3 very different questions. And rather than I'll parcel them out. Alistair, would you like to take the first one? What's special about somebody's name? I could see you were straining to get at the microphone for that.
It's a very good point, because we didn't have those privacy problems, but we had big data in the first instance, and it served business very well. And unfortunately, sometimes technology gets so advanced, it creates problems that we didn't have before. We use the analogy that you wouldn't write down your credit card details on a post-it note, your mother's maiden name, your first pet's name, and your email, and then leave it at every shop on the high street. But in a digital sense, we do that with our credit cards, especially in the West, yeah? And so as we get more technology, we leave more remnants of that. And not only that, but you can associate it to me as a person, as an individual, and probably follow a path as well. So I think the problem is both the problem and the benefit is technology again in itself. But can we use technology, new technology such as blockchain, to actually resolve what has now become a problem? And I think we can. And we can also do it with legislation and rules and regulation, as I spoke about, anonymity through product use and stuff like that. So you have to be careful that as we get more GPS tracking, location, biometric facial scanning when we walk into a shop and things like that. This is great. I can get to the Starbucks counter, have paid for my order, and they know what I want, and they don't write my name wrong on the cup, which is a great opportunity. But does it then go to step too far, that they know I've been in that shop and I've spent this much and it was me personally, and so on? So I think it's a measure of using technology against the data that's available.
Kevin, smart contracting and Belt and Road, great question. Thank you for that. And is this something that Douglas Flint should be thinking about? And he's a sort of Belt and Road as an asset class. Could blockchain smart contracting be one of the things that helps define that, do you think?
So I don't think the smart contract right now is smart enough. So we can do some very simple transaction on blockchain right now, and you cannot rely on it right. In the next 2 or 3 years, I don't think smart contract can be mature to be used widely. So, so for these questions, I'm not a technician. So, but I think yes, it's a real good dream for blockchain. But we have a lot of problems, the TPS problems and the ethic problems. Sometimes whenever you execute on the blockchain, you cannot reverse. And sometimes it will be another big problem in some cases. So for these questions, I can see, so smart contract today is too early to discuss. Yeah,
thank you. Tom, perhaps could you help us with the third question? Is there if you're setting up a FinTech, is there an issue with the border between Hong Kong and mainland China, or is there not an issue? How should we look at that as a problem?
In Hong Kong, we are already trying to establish a company. In Hong Kong, we have a branch company which is fully owned by us, and it is engaged in our overseas business. So this branch company of ours is located in Hong Kong. There are different arrangements of laws and regulations, of course, between Hong Kong and mainland China. And also, when we are making investments overseas, in China, we have very strict rules governing the capital flowing out from the country. So we need to have a very strong reason to show the country that we want to invest overseas for a very strong and plausible reason. Well, of course, we want to use our technology to serve overseas customers, overseas market. The Chinese government recognizes that, but then it takes time for us to get the approval from the government. And of course, the different business practices do exist in Hong Kong and mainland China. For example, Bank of China, Hong Kong is our client. Standard Chartered, they are also our clients as well. And these banks located in Hong Kong, they have different mindset from the same banks in mainland China. So in mainland China, when we provide our service, we have business deals together. But in overseas markets, the banks will have very high or strict regulations upon the technology systems of certain target companies. So, of course, there are differences between the Hong Kong and the mainland China, but it doesn't pose too much a hindrance of us setting a company in between.
I'm not even going to try and summarize that discussion. I mean, I think that was a really interesting and rich discussion. I hope you'd agree. And would you join with me in thanking our panel?
Thanks for listening to the CEIBS China Knowledge Podcast. Keep up with business in China by subscribing on iTunes or through your favorite podcast app. China-Europe International Business School has campuses in China, in Shanghai, Beijing, and Shenzhen, as well as Africa in Accra, Ghana, and in Europe in Zurich, Switzerland. CEIBS is the bridge that connects the world and China.